Now the part of the show where we talk about three things that individual investors should be focused on before you make your investment decisions. Of course, what is number one? Trade deals need to be top of mind, especially as I briefly mentioned just a few minutes ago between China and the US, and also major US trading partners. Inflation and Federal Reserve interest rate decision. The Fed's going to make an interest rate decision in the next, well, let's call it next week, week and a half. And we're going to hear what Jerome Powell is thinking. We know the president, just based on this morning's CPI data, which came in below expected. So again, inflation in and around 2.4%, just above the 2% target that the US is striving for, or the Fed is striving for. And obviously, the president is calling for a full 1 percentage point drop in interest rates. Not sure that's going to happen this year or anytime soon. Our third topic, our third idea, some stocks are now fully valued. I guess a couple of months ago, back in April, there were many things that were on the cheap, and I came to you and said, this is the time to improve portfolios. This is the time to better a portfolio. Take out some B names, put in some A quality names because they were cheap. Well, a lot of those A quality names have gone up in value and now are fully valued. So we'll discuss that. So let's get to the first one. Trade deals are top of mind, especially with our major trading partners. Our first chart clearly shows who our major trading partners are. There you have it. Mexico is the U.S. Major trading partner, with along with China and Canada. Obviously, China being the second largest economy in the world, very important for the United States to get a trade deal done with them. But of course, trade deal with us here in Canada and a trade deal in Mexico is extremely important, and we go a long way to, I guess, quell investor fears and to really get economies moving forward again. And as I said, I think when we look back, I believe years from now, I think we're going to look at this time as the turning point for our country, the time when we didn't rely as much, or we started to rely less on the United States and start to forge our own deals with other parts of our country, meaning interprovincial, but as well as forge deals with Asia, Europe, other parts of the world, Africa, provide what we take out of the ground and what we build to others, other places in the world, and not be so reliant, not send 70 or more % of what we build and take out of the ground to the US. Perhaps we should start looking at sending it to other places. So those are the three major trading partners to the US, of which we are one of them. Our next chart here shows what tariff threats mean for the US economy. And we have that here. You can see that how much the China trade has surged over the last 20 years. Although you can see since we, I guess, the point where the Trump administration put tariffs on China, you could see that it's been an up and down sort of thing. And you can see how US imports from China have definitely lagged. We're going to see that in another chart in just a few moments as well. But you can see the reliance on China and trade with China, imports from China, how much they've gone up. And you can see exports to China, how much those have gone up as well. So China, major trading partner for the United States, which is obvious. They need to get a deal done. And it shouldn't just be a deal for rare earth elements. What about everything else? What about all the other areas of trade that U.S. does with China? Our next chart, again, shows the importance of China to the U.S. You can see here, share in China's exports, how much exports to the United States. Look how great, how much more goes to the U.S. than anywhere else in the world today. These are the export markets. This also includes Hong Kong. But overall, you can see the dot there representing how far out the United States is from anywhere, even regional partners such as South Korea, Vietnam, and Japan. The United States is by far the largest destination. Our next chart here shows China's share of U.S. imports by category. And I like this one because it shows us what's the biggest thing the U.S. brings in from China? Toys. I think it's something that perhaps if we had to guess, you may not have guessed. But when you think about it, Toys. How many toys do we see, even in our country here in Canada, come from China? Quite a bit. And so when there is a tariff placed on China and goods coming from China into the US, that just means that the toy season or the gift season or the holiday season is going to be a lot more expensive in the US, whether it's Halloween, whether it's Thanksgiving, whether it's Christmas. Right now, there's talk that perhaps 55% tariffs will remain on China. That is the 10% from this year, the baseline, plus another 25% for the fentanyl, and then the 20% tariffs that the Trump administration put on China from the first term, from the previous term that President Trump was in power. So it's interesting. The one takeaway I would have here, though, is if you look at the 2017 line, which is in the gray, and 2023, you can see that imports from China have definitely come down, and we saw that back in the previous chart. So even though the US is still very much reliant on imports from China, it has gone down quite a bit from where it was in 2017. Our next chart, another one here, trying to go through them pretty quick. This is about rare earth elements, and you can see here just how much China makes up of the world's rare earth elements. Something like almost 50% of rare earth elements come from China, which is why it is so important for the United States to make some sort of trade deal. And we've heard just this morning that a deal has been reached so that the US can continue to get these rare earth elements from China. There will be no stoppage. The question is, what has US given back for this negotiation? And there's also talk that more trade talks will take place in the coming weeks. And I think it'll be interesting to see when the details are announced, probably later today or maybe in the coming days, what it is that the US is going to give back. Perhaps it is semiconductors or chips to China in return for these rare earth elements. So trade deals, you want to keep that top of mind. Second point, and we always have one of these points in our top 3 things to consider, which is the economic data out of Canada, out of the US. And we just received inflation data out of the US this morning. CPI, Consumer Price Index, showed that prices continue to come down. Headline number was below expectation, 0.1% growth month over month, which was very low. And inflation rate coming in at 2.4%, below the expected rate of 2.5. We saw that the volatile core, which takes out volatile food and energy, we have a chart we can show that, shows that that rate or CPI rate is 2.8%, and that has remained pretty stable. So headline number 2.4%. Core, which takes out volatile food and energy, which I always say you can't really take out, but Federal Reserve likes to take a look at core numbers. That comes in at 2.8%. Tomorrow, we're going to get wholesale prices out of the US, which is your PPI number, producer price index number, rather than a consumer price index. Our next chart shows that we're expecting a number somewhere around 2.4%. If that were to increase, perhaps that would give us an indication that wholesale prices have moved higher, and then in turn, maybe consumer prices will move higher in due time. And again, we're still waiting for that data to show us that inflation is ticking higher and prices are moving higher. We keep getting warnings, but no data to back it up as yet. Our next chart, Fed funds policy rate. You can see here that it's still in that 4.25%, 4.5% range. The Fed has been on pause for the last couple of meetings. Bank of Canada has been on pause from the last couple of meetings. Both of them are saying economies are doing well. We just had some economic data out of our country showing that we have growth of roughly 2%. So, are you going to lower interest rates when the economy is doing well, when employment in the US is at 4.2%, still pretty low? Probably not, even though President Trump is wanting the Fed to cut rates in anticipation, perhaps, of things to come. It doesn't look like the Fed is looking to cut rates anytime soon. So we want to continue to focus on the economic data, inflation data, Jobs data, we just had it for May. It looked okay, coming down a little bit, still strong enough for the US market, strong enough for the Canadian market as well. But we want to continue to look at economic data to give us an indication on how the stock market will move forward. Our third and last point is this idea of fully valued stocks right now. We've seen a lot of bargains in the last couple of months. A lot of these names have been bought up. A lot of that has been buying by retail investors. And it's funny because they always say the smart money is moving out when retail investor is moving in and vice versa. Well, I'm here to tell you that the retail investor was the smart investor this time, when some of those institutional investors, the smart money, the savvy investors, as we call them, the ones that should have their finger on the pulse of the markets, when they were selling back in April, it was the retail investor actually that was coming in and buying up the bargains, and the retail investor was right. And we've seen the stock market bounce back from a 20% decline on the S&P 500, bear market territory, all the way back to break even, and now a bit on the positive side. A couple of stocks I wanted to highlight for their performance that we talk about on this show often. Our first stock, TD Bank, a name that was left for dead, I guess, months ago because of the issues down in the US, because of their situation, their compliance situation, money laundering and their fentanyl and all that we heard that the issues they were having. Well, take a look at the stock. You'd be hard pressed to find another Canadian stock or Canadian bank stock even that has performed better. TD Bank has gone from a stock in the high $70 range to a stock that's almost reached $100 per share. An unbelievable run. Things are getting better. We've seen a change in management. We've seen things improving in the US. We've seen TD Bank selling off Charles Schwab, part of their investment in Charles Schwab, another great company that has brought in a lot of money. So TD Bank has a lot of money there to do things with, whether it's buy back stock, increase dividends, or eventually perhaps make an acquisition here in Canada or somewhere outside of Canada. We know they can't do anything right now in the US, but perhaps if that rule is relaxed, they will be able to go in aggressively into the US market. Another bank stock that has done extremely well, CIBC Bank, once upon a time again, on sale. Today, sale is no longer there. Dividend yield is not as high as it once was, in the 4.5% range. Once upon a time, it was a 6% dividend. Because the share price has gone up, that dividend rate has come down. And probably the best bank, one of the best performing banks anywhere, is the biggest bank in our country, Royal Bank. Look how well that stock has performed. Kind of leveled off in that 175 range, and it's got up to maybe 178, pulled back a little bit. But again, another bank stock that has not, or at least has performed extremely well and no longer offers you a discount to buy the shares. And our last stock here, I thought I'd change it up a little bit, show you a tech name, Broadcom. These are the guys that have a very diverse business. A lot of their business, and the main reason for their stock rising lately is their chips that are involved, custom chips for artificial intelligence, but they do software and they do a bunch of other things as well. You could see once upon a time, Broadcom back beginning of April, first week of April, was down below 150. Now look at the stock. Stock trades 240. It got as high as almost 270. But a name that right now I think is fully valued. So as an investor, I think you got to be mindful of which stocks you're looking at. Once upon a time, many of them were on sale. Today, I think they are fully valued. There's still a lot of bargains out there to be had. You just have to do your homework or ask your investment advisor, ask myself. A lot of things I'm still looking at purchasing. So the bargains are there. Bargains are really always there. You just have to do your work to try and find them, as we say. Always a bull mark somewhere. We just have to find it. So keep an eye on the data, keep an eye on the trade negotiations, and keep an eye on where stocks are trading before you make your investment decisions over the next few weeks.